right, welcome to this week's lesson. We are going to take a look at financial management basics, stuff that makes every entrepreneur shudder, but it doesn't have to be excessively complicated. We're talking about the basics here. And yes, preface this with make sure you got a good bookkeeper, make sure you got a good CPA. If you're trying to do it by yourself, make sure there is somebody qualified that you can talk to, that you can walk you through this more complex stuff. But we're dealing with the basics, and you all should be able to understand basics. Now, I do teach this a little bit more in depth in the cash flow bucket chapter of the 90 days program, but this will give you the basic understanding. And if you want to go a little bit deeper, then you can check out that program in the other group. All right, financial management, budget, cash flow management, financial forecasting. Any of you actually do any of that? So you really have to have a good handle on the understanding of your cash flow and your finances. It's so you can make informed decisions when you need to make them. Far too many of us try to avoid looking at the checking account when we know it's low. The exact time to look at the checking account is when it's low. That's when you have to do it. But these are a few principles that I've run across that should help you plan a little better for the future and make sure that you've got a little bit of nest egg set aside within the company for when things do get bumpy, because they do. And that's how you become good at sailing, is sailing on bumpy seas. So several components to financial management. Let's take a quick look at them here. Budgeting, the dreaded B word. Who likes the B word? I don't know. But budgeting is the dreaded B word. I like the B word. I like knowing what the fuck I've got coming in. I like knowing what I can expect over a specific period. And I like knowing what I have to pay out and what I'm on the hook for. And you should too. Budgeting shouldn't scare you. A lot of us want to wing it, and we look and, well, there's money in the account, there's checks in the checkbook, so I must have money, I must be okay. And it's not like that. If you've got a financial plan and you know that if I sell 10 of these things in a month, then I'm going to have $20,000 in the bank, but it's going to cost me $12,000 to do all my sales, then I'll have $8,000 left over. And if that's what you're shooting for, that's great. But you should know that it takes 10 sales to get you to that number. Like, you should know that if I want to make 50 grand a month, then what do I got to make? Well, I got to do 10 sales plus 10 sales plus 5 sales. So now I got to do 25 sales. Well, what would that cost me? And it helps you allocate your resources. It helps you know where to put your money, and it helps you stop overspending. It's very, very easy to overspend in business. So I highly recommend you go out and find a simple budget template for your business. I haven't put one up here because every business's budget is going to be fractionally different. I've done budgets with 10 different layers on them and, millions of dollars in outputs, and they're all different. But again, small business, it shouldn't be that complicated. All right. So one of the things that I really want to look at that we don't ever do is the cash flow management side of things. Money in and out of your company. There is a couple of wonderful books that I would like you to go and get. The first one's Profit First by Mike Michalowicz. I think I've got a copy of it on my shelf there to show you. And the second one is The Richest Man in Babylon by George Clason. And both these books, they both adhere to the principle of paying yourself first. And it just works. Now, again, I've talked about this a lot in the paid course. It's very important to pay yourself first. The psychology behind it and the psychology of operating off of 90% of your money and the psychology of knowing that I'm going to put 20% into reinvesting for the business and for growth. I'm going to put 10% into the profit first situation. I know I've got to save this much for taxes. I know. And by the time you break it all down, that $1,000 that you made ain't worth $1,000 because X% has to go here, Y% has to go here, Z% has to go there. But if you treat every dollar that comes through the company in the same way, And for every dollar that comes in, you know that 10 cents has to go over here. You know that 20 cents has to go over here. You know that 15 cents is over here. And you look and your dollar that comes in is worth about 30 cents by the time you get done allocating it into the proper places. And so a lot of business owners don't get that. They don't understand that A, B, and C coming in doesn't equate to having D in the bank. It's A, B, and C minus X, Y, and Z, and then anything else that we find as well. So it's very, very important to structure it that you take money as soon as it comes in and allocate it to within the places in the business that you and your CPA, you and your advisor have decided that money's going to go. And it's very, very different as cash flow when you actually divert that cash flow into the places it's supposed to go. The whole company operates better. You've got to keep an eye on your cash flow statement to understand your cash position. I will let you know what's coming in, what's going out, what's due, what's not due. There are ways. I mean, this economy. I don't want to say this economy's rough because that's calling it into reality. But I am noticing invoices taking longer to pay, and when it takes people longer to pay me, it takes me longer to pay people, and there's a whole knock-on effect. So pay your bills quickly, pay your bills on time, but also expect that from your clients as well. If they're not paying quickly, if they're not paying on time, see what you can do with them. Maybe there's some discounts for early payments, something like that, or maybe they're not a good client. You've got to go through your foundations of your business and say, is all business good business? And maybe it isn't. So try to speed up your receivable payments. But again, pay your payments fast, pay your people fast, pay your invoices as fast as you can, because it helps the other companies obviously on the other side, but it also, there's definitely some kind of karma that goes on. The quicker I pay, the quicker I get paid, and the more money I charge, the more I can pay my guys. And so it all kind of goes around and around. So manage your payables wisely, but pay them as quick as you can. There are times when it's advantageous to keep your cash and make these guys wait another week, but don't do it to little guys at all. Really be aware and flip the switch and pretend you're on the other side of the equation where you've got 20 or 30 grand outstanding. And at the level that a lot of you are at, having 20 grand outstanding is, it's a hiccup. It's something that's like, you're going to lose some sleep over that. That's a lot of money to be out for a small business. And so, if you can, or as quickly as possible, what I should say is that 10% that you're paying yourself and the 20% that you're reinvesting into the business, maybe there's some room in there for you to build a cash reserve and start setting aside cash as a buffer. Because the only thing about unexpected expenses is that you should expect them, because there's always an unexpected expense as a business owner. You're doing great, and then a cooler flies off the back of the truck in front of you, and all of a sudden you've got to buy a new windshield for one of your work trucks, and there's $600 you didn't have. Doing great. No. I don't know. I mean, there's a whole litany of shit that can go wrong. There are little $500 and $1,000 problems that aren't a problem at all if you've got some of that cash reserve set aside. So I know it's a very tricky economy, but by routing your cash flow as it comes in the business, like the principles explained in Richest Man in Babylon and in Profit First, by doing those things, you will be able to set aside a cash reserve. It just takes a little bit of time. So highly advise you pick up those two books. You want to look at your forecasting. You want to be able to predict your financial future based on data, based on market trends, based on what's going on. Like if you sell hot dogs and 4th of July weekend's coming up, you probably need to buy more inventory than you needed to buy 3 weeks ago. But it does help you plan to grow. It helps plan to get around those challenges and stuff. Another one that's really difficult is expense tracking. How many apps do you have for your business? How many software subscriptions do you have? How many times do you run to the gas station and buy stuff for your guys? it doesn't seem like a lot, but 30 or $40 of daily expenses, can be a significant amount of money by the end of the month. It's easy as a small business owner, and especially the ones and twos, the guys with a few employees. It's very, very easy to overspend on stuff and lose track of expenses. So I can't stress enough. When we had Texas Media Foundry, and there was 9 of us, the daily expenses just on bullshit that you needed to have, it would add up. So it's very smart. Like you'll have some folks that are trusted with company debit cards and stuff, but it's very smart to reconcile at least a minimum of once a week, so you can go over and say, hey, what the fuck are we spending, and what are we spending it on? Because you can very, very quickly have a $1,000 to $2,000 to $3,000 like software subscription bill. Like there's so many things that can just escalate on a business. So especially when you're in the starting out and you're in the growth phase, keep a really, really watchful eye on those expenses and on that checking account. All right. That's going to do it for financial management basics. I do go a lot deeper into segregating cash flow into different channels, and how I build my savings and stuff inside of the next 90 days course, which is a little bit more money, but that should give you guys a basic overview of financial management. At very least, run out and grab those 2 books. The Richest Man in Babylon is a wonderful read. It's about $10. I must have given away 60 or 70 copies of it over the last 15 years. It's a book that really was fundamental to me. And then Profit First, it takes those principles from Richest Man in Babylon, and it helps you to put those principles into practice in a business scenario. So 2 wonderful books. Go get those, read them up, do the homework, do the quiz, and if you've got any questions at all, post them in the forums, post them in the school group. That's what it's there for. And Q&As live every week. I'm going to get out of here, and I'll see you back in the group. All right.